Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq, coming to you live from the Singapore Fintech Festival. Joining us for this segment, we have Morgan Krupetsky. She's the head of institutional and capital markets over at Ava Labs. We're going to discuss OnFi and tokenizing real-world assets. Morgan, it's great to have you with us. Welcome to TradeTalks.
Thank you for having me.
And this really has been a big topic here and other conferences that we cover, but tokenizing of real-world assets, it's happening now. It's no longer a concept.
Exactly. It's definitely happening now, both from a broader adoption perspective as well as an institutional focus perspective. I think just in general, taking a step back, the concept of tokenization of real-world assets isn't necessarily new. I think the concept has been running around for multiple years, but what's interesting this time around is we feel like this time is different, and it's the case for a lot of different reasons. I think, interestingly, the concept regained in popularity toward the end of last year for a few kind of broad-based macro factors. I think in the first instance, we had rates in the real world going up, and at the same time, you had therefore the value prop for just like pure on-chain DeFi going down. You had more infrastructure in place this time around than last time. You had the advent of DeFi, which really kind of enabled the idea of utility for a lot of these tokens that were trading on-chain, and really kind of showing what you could do on-chain with respect to real-world assets. And then you finally had major executives of Wall Street buy and sell side firms really kind of touting the future's tokenization. So I think between all these things, we've really seen an increased focus on the idea of real-world asset tokenization, and for a lot of those reasons, it feels that this time is different.
Well, it's also the interoperability of the networks have certainly matured, and that really, besides regulation, that's the hurdle that you really need to overcome. Yeah. And you had a couple of announcements recently leveraging
interoperability and leveraging Avalanche. Yeah, I mean, I think it's interesting because in talking to a lot of the institutional partners that we work with, those that have been at this for a while started many years ago, where the only options really were public permissionless or private permissioned. And so a lot of them historically have built on these kind of private permission, what they would call islands or silos, without this concept of interoperability. And I think since then, solutions have come out like Avalanche that kind of really provides a hybrid between the public permissionless domain and fully private and permissioned. And so I think with Avalanche, particularly Avalanche Evergreen subnets, they really give institutions the best of both: public blockchain infrastructure development, DeFi innovation, the robust developer community, but at the same time allows them to, customize their blockchain environment and own their blockchain environment, meet a lot of internal and industry-wide considerations that have historically led them to launch on these enterprise chains. So slowly but surely, we're getting the word out there in terms of Avalanche subnets, and really seeing institutions either launch on subnets in the first instance, like with Citi, and we can talk about what those announcements were, or kind of expand beyond their enterprise chains, like with JP Morgan yesterday. And so we're really starting to see greater adoption from an institutional perspective.
And when you look forward, is this a world of TradFi versus DeFi, or it's going to be more integrated? I mean, obviously, especially in more mature financial markets such as the US, you can't just do away with legacy assets. So do you think it's more of integration versus us versus them?
Yeah, I think that's right. I think in terms of where I get excited, it's really in the realm of what we would call on-chain finance or OnFi, where it's really the idea of leveraging blockchain technology plus tokenization plus smart contract logic, a lot of these things that really made the primitive DeFi applications interesting, and really using those as like a collective infrastructure to upgrade institutional ways of working and legacy infrastructure and workflows. And so when you put kind of these worlds together, it's really looking at on-chain finance as really kind of the next step in the financial services industry, and incorporating real-world assets, many of which most of the time are securities or security tokens that follow the existing, to your point, laws, rules, and regulations that exist. But it's really kind of putting these assets on chain, empowering them by these new kind of execution wrappers to really create these efficiencies and cost savings that everyone talks about.
And that's a great way to explain it in something that's digestible. So let's use the JP Morgan announcement as an example. I think that's a great visualization, if you will.
Yeah, so with the JP Morgan announcement that came out yesterday, that was done really in collaboration with Apollo, and then Wisdom Tree kind of joined in as well. And with them, and why I loved working with them, is they've always looked at this space with a business case first approach. They always kind of took a step back and thought, what are either the pain points that we're trying to solve, or what is the business imperative that we're trying to solve, or what is this new kind of business model or business case that we can drive for our clients? And so as opposed to kind of looking at it as more of like a solution in search of a problem, or what do we use this technology for? And so with that in particular, what they were looking to do is really looking at, again, this combination of blockchain, smart contract logic, as well as tokenization, to be able to systematically include both traditional as well as alternative assets into kind of discretionary portfolios at scale for individual investors. And so in this way, you're really, driving forward the idea of the democratization of finance and giving individuals access to alternative investments at scale, which historically hasn't been possible because a lot of these alternative assets, private equity, credit, real estate, and infrastructure, are really cumbersome to administer, are really kind of manual to operate, not standardized. And through this technology collectively, you're really able to again, start introducing these efficiencies to be able to create these new business models.
All right, Morgan, appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me from Singapore. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.